gentlemen, the king.
It's Royal Blu FX here. Today we're going to go over some of the trades that we've taken as of today, but we're also going to talk about snipe entries. What are snipe entries? Because a lot of people talk about that out there. You know, it's all out there on YouTube and everybody's talking about it, right? So I'm going to show you what snipe entries are versus what a non-snipe entry is on this video. So stay tuned. Let's go ahead and click the link right here at RoyalBluFX.com or in the link in the description below and begin learning to trade with us today. All right, guys, so this is going to be a relatively kind of a quick video, but I just want to show you what we did today and sort of discuss about what a snipe entry is versus what a non-snipe entry is. So as you see over here, we have all wins. There were buys today on US 30. What I normally do is just start on the higher time frame, and the higher time frame for me is really the 1 minute time frame, or at least the 15-minute time frame at the most. But more so or not, it's usually the 1 minute because I'm looking at to target the 1 minute highs and 1 minute lows structurally. Okay, so right here we're on the 1 minute, and if I zoom out over here, what I do when I start out trading, I look at everything first, right? I look at everything and I mark everything out just to see where price has been, obviously, and where I need to be when I start trading. So as you can see over here, that there's this X right over here. This is our liquidity mark right there. So we know that price goes towards liquidity and takes liquidity out. But when we trade away from liquidity. So in this case, as you can see, we were actually trading the US 30 open, and when the open happens, this is my time frame here is set to the US 30 open. Excuse me, to the US 30, which opens at 9:30 a.m. Right over here. So you can see my timeline here is set at 9:30 New York time, and we pretty much caught this as soon as 9:30 opened. Now what we do here is we're following order flow on the 5 seconds time frame, because 5 seconds is our entry time frame. So we're following the order flow on the 5 seconds time frame because that is our entry time frame. And this is a different approach probably to some of to a lot of traders out there, but our approach is essentially knowing that if the market is fractal on every time frame, or just fractal, right, and shows on every time frame, what we are trying to do is simulate what is on the higher time frame just on the lower time frame. There's nothing special. So this is what I would consider a snipe entry. So let me just show you right over here. As you can see, price has been bullish right over here for some time, obviously on the 5 seconds, all the way starting from this low here. We see that price did respect this demand zone here, and it kept pushing bullish, giving us beautiful order flow. Once I spotted this area right here, okay, you can see that there was a break of structure right here. This is what's a little tricky on the 5 seconds, but it's the same on every time frame. I'm telling you, however you trade structure, it's the same on every time frame. So when I click that line chart there, you can see that there's a break of structure. I quickly identified my inducement, which is right there. Now I didn't mark it out, but I knew it in hindsight. And the reason why I didn't mark it out, obviously, because it's US 30, when it opens, it just goes, it flies. So that's my inducement right there. And then we had price mitigate this level. You can see I had my zone dropped a bit here just to give the market just a few, some room to breathe, so price doesn't take me out, right? And then as soon as price showed us a bullish candle, and we just entered there as soon as we can, and then we targeted this high where this inducement area was. So that's how this is essentially what we did on this trade. Now let's follow this area here. As soon as price dropped low here, I can see that price was shifting. This is our internal shift structure in here, as you can see. We had price come down, sweep this liquidity. Of course, I didn't mark this one out. Right over here, as you see right there. So once that has happened, we had a change of character here, our chalk, right? I know we marked some inducement in there, right? I'm not looking to sell because price isn't bearish, it is actually bullish still. So internal structure shifted there, and what I'm waiting for here is for price not sort of to mitigate a position here right now, because it's not mitigating anything. It is just showing us a lot of imbalance. There's no real structure, no inducement. So what I wanted to see here was, where's the inducement, right? I wanted to see buyers buying aggressively with the market, with the banks, right? So here is this area, this low here, where price just went up so fast, right? And we had 2 points of inducements. The first one was this one, and the second one was this one. This one right here is what we call it at Royal Blu FX our internal inducement model here. Okay, and this is the main inducement model right over here. Excuse me, I can't even draw today. Right here. Okay, both of these inducements continue structure, although one of them there's two differences. Obviously, this one is continuing the internal structure, and I only have at least the current high to target, nothing above, because we know the internal structure doesn't necessarily move higher than its previous high or previous low. So it's safe to say that this high would have been the target. Although the other one, which is our main inducement model, which is right here, is where we enter from here, right, and we target the main high from this swing low to this swing high. And that's how we were able to enter this one. So this was a pretty good one. Now, once we were targeting this high, I did my due diligence, excuse me, here to see where our chalk is. Our chalk was made right here, right over here from this high to this low. A lot of you would argue probably it's this one here because it did break a low and it did break a high, but this is internal structure. What I'm trying to do here is look at our main internal structure. This is our microstructure right in here. Okay, and if you guys don't know what microstructure is, go ahead and refer to our link at Royal Blu FX to check out our course. We explain that a lot. So we look at our internal structure right here, which is our sub high. We mark that out, and then we finally saw where our inducement is right over here. So we marked that inducement, and we were patient. We waited for price to get there because we know that the order block is going to be right near or at that where that inducement is. And price came and took this low over here, as you can see. It swept that low and it just went up, and we targeted this main high because we know price has to go to that high. Okay, so a lot of this type of trading is really just looking at confirmations. The confirmations are happening right when the impulsive move happens. Okay, whether it's bearish or bullish. That's where our confirmations are. Okay, we don't look for confirmations when price gets to our POI. We just enter there, which we'll talk about in a second about snipe entries versus non-snipe entries. As you see over here, I did my due diligence right over here where the chalk was. I took that out, right? I marked that out, excuse me, and I knew that we need to be looking at prices in this area, in this POI, because this is where prices are going to be going. So what I saw when we had a break here, we also saw this whole thing wasn't quite swept yet. Price left a lot of liquidity there. This is another type of inducement for us. This is like our major inducement, not the main inducement, but the major inducement. And so what I did here was I put out my POI, right? There's my inducement. The POI is near or at the inducement, and then we just entered. We entered here, right? Now we know we haven't broken a new high yet, and this is where the confirmation can kill sometimes, can kill trades. So what I did here was once I entered, I simply understood that when price is going bullish, I would need to take some partials right here where my other inducement is, because we have a high and a low and a high and a low. This is my new swing point, and this is where I placed my inducement to be. So I was really patient when I entered here. I was really patient to wait to see if price can hit our inducement where I can take most of our partials. And the reason why I would want to take partials here is because we are still bearish. Even though we haven't broken this main low right here, we are in a sense still bearish. But on the higher time frame structure, or the major structure, as you can see, we do have the swing low here and the swing high, which is telling us the prices should continue bullish here. So my main thought process here was, let's just take most of our money in this inducement, because and this inducement here is very vital, because we know that when prices go to inducements or liquidity, prices tend to naturally go to them and then reverse right away. So in this case, we took most of our partials here, but yet we had our POI where it was standing, where I would naturally target to look for entries and sell from this one especially too. But yeah, we took our rest of our trade here. What I want to show you here is where is it? When price got here, I wasn't looking for prices to continue any higher because we had this main chalk. Okay, when the chalk forms, this is when you really want to be aware of what price is doing, because we know The way we trade is based off of ranges, and a range consists of a swing high and a swing low to create, and most importantly, for a chalk to create between a swing high and a swing low. That's how we trade. That's how we take advantage of the markets, right? Obviously, when price got here to this POI, we could have sold it, but we called it quits or whatever. We ended our trading day for this day because we were all positive, obviously, and we don't always want to be right into what is it called? We don't want to be exposed to too much risk, right? So therefore, we finished our trade there for today. And obviously, if I took this one here, this would have been beautiful. But it's the same thing again. It's the same thing. Right over here, we had our inducement right there, as I saw it right there, and therefore I marked my POI right there, so I could have sold it right away. So knowing the inducements is very vital to knowing how price moves. We don't just look for liquidity, we look for the inducements because we know the inducement controls liquidity. All right, so let's go to the topic of snipe entries versus confirmation entries. So a lot of traders would probably, shame me and, whatever, to each his own, obviously, at the end of the day. But this, to me, the way we trade is based on a snipe entry. We don't necessarily have confirmation on the right here. When we're looking at confirmations, we're actually looking at what this impulsive move did to then compare what price will do here. So what we're looking at our buyers versus what the sellers are about to do, right? Where is price most likely and probable going to be for price to enter? Where you can enter the price and essentially target the next area, right? The way I like to call our trading is essentially ping pong, right? You can ping pong trades if you understand where prices are intending to go. So what we do is snipe entries. Snipe entry is essentially when price gets to your POI, you just enter right away without any confirmation. If I wasn't to enter right here right away, I would need to wait for confirmation. And most of you out there have probably been taught the chalk theory, where you wait for a high like this, for example, to be broken. You can see that there's a low broken here. Well, first of all, let me just tell you, price came all the way down to a demand zone right here. Once price came to a demand zone, we were looking. And this is where the confirmation entry can kill. Is when you have a chalk here, the low needs to break first, the high needs to break second, right? Now, once this has formed, then a lot of traders will look to say, okay, well, now I have a chalk. So where's my POI? It's either at the flip right here, or it's either going to be at whatever this area is over here, this demand zone or whatever, right? And that's where a lot of traders can be killed, right? So this is why we don't really impose on having confirmation entries, because a lot of the times prices either, when you enter at the correct POI, you have about 90% of a target 90% of the time where the markets will go in your favor based on if the markets are moving in structure formation, which is the highs and lows like this, right? Creating order flow, something like this, right? I know my pen is a little bit slow. It's a little bit slow here. Or prices move in the imbalance formation, which is something like this, all right? So we're looking at liquidity here, which is structure, and our imbalance formation. These are the two ways that we know the markets move, and they move for a certain reason, obviously, like this. One of them obviously takes liquidity, the other one creates liquidity. So more on this, obviously, on our more on this on our course, obviously. But yeah, guys, this is how you are able to identify, or at least know how to trade, if you have the certain criteria the way we trade. So it's not bad to look for confirmations, although I know confirmations are a type of reserved trade. It's for reserved traders that are more reserved than aggressive. But I always say again, if you don't know what the impulse move is doing, then you're not going to know what you're looking for here on this side, other than waiting for a chalk, right? A pattern that everyone knows. You just wait for prices to break a new high, and then you wait for prices to come back to you at your order block or what have you after the break, and then continue from there. So obviously there's a lot to talk about, but I'm going to end this video here a little bit short because I know it's kind of going a little too long. But anyway, guys, if you guys really enjoyed this video, go ahead and throw a huge thumbs up on this video. And if you have any questions, please comment down below, because I will answer any questions you guys may have. Until then, guys, I love you all, and I will see you in the next.